Okay, now we are going to present about the financial report. And financial report is basically help us to analyze and interpret the company key financial statements. And there are three types of financial statements, which are balance sheet, income statement, and cash flow. And balance sheet reports about the financial condition at a specific time. Income statement show financial performance over a certain period, and cash flow tracks the flow of cash in and out of the business.
Good morning. So I will now walk through the key assumptions from the operating activities. So we have started conservatively in 2022 with 10,000 units. So we have assumed a 50% growth in 2023 to 15,000 units and finally reaching a 20,000 units in 2024. Throughout this period, we maintain a constant selling price of 16 ringgit per LED lamp. After that, on the cost side, our raw material cost is fixed at 6 ringgit per unit with factor in annual increments. For example, our shop rental start at 18,000 ringgit but increase by 500 ringgit annually to account for inflation. Then our company have about 4 staff members. Their base salary start at 1,875 ringgit per month, totaling 90,000 ringgit in the first year. We also included a yearly salary increment of 200 ringgit per employee to ensure staff retention. Next, we will now go to the assumption of cash flow from the financing activities. So for the financing activities, we have 6 owners contributed 20,000 ringgit each, providing 120,000 ringgit in capital. We also have secured a bank loan of 100,000 ringgit. This is an 8-year loan with a 6% interest rate, which required us to pay approximately 18,500 ringgit annually in principal and interest. This structure allows us to maintain our liquidity while establishing the business.
Hi, my name is Yeoh Fei Yee. So now I'm presenting the cash flow table for our company from year 2022 to 2024. So let's directly jump into the cash flow table. All right, so here's the cash flow table that made by us. So we can see the category year we divided into 2024, 2023, and 2022 also. And we have 3 main categories, which is part A, the cash flow from our operating activities, the cash flow from our investing activities, and the cash flow from our financing activities. So I'll talk about part A first. So in 2022, we will assume our cash sales will be 160K, and the price of the raw materials will be 60,000. For the shop rental, we assume that we will have 80,000 in total, and the salaries to our employees and ourselves will be 90,000. Utilities, marketing, and insurance, we keep it like as the same for the 3 years, which is 1,000 ringgit for utilities and marketing, insurance for 600 ringgit. But in 2023, we see a difference between the raw materials and the shop rentals and salary and stuff. This is because we believe that inflation will come and we are going to expanding our shop. So the raw material will be increasing, including the shop rental also. So when our employees, they are behaving like so well, we will have the raise for them in 2023 and 2024. So this is the differences between the cost of salary and shop rentals and raw materials in year 2023 and 2024. As for part B, for the first year, we are going to purchase shelving and shop fittings for our shop and also the machinery to produce our light bulbs. So we assume a 10,000 ringgit for our 10,000 ringgit, sorry, 10,000 ringgit for our shop fittings and a 60,000 ringgit for purchase of machinery. And because it's the first year, so we are not planning to have any shop replacement for the equipment. But for 2023 and 2024, we assume that the machine, they need maintenance and something was spoiled, so we have to replace them. So we assume a 2,000 ringgit for the both year. For the cash flow, part C, just like what KHAI presented, we will have 120,000 for our capital equity and 100,000 ringgit from the loan from the bank. But please don't forget we have to pay back to the bank for a few years. So for the loan payments, first 3 years, it's a constant of 12,000 ringgit and 500, and the 6,000 ringgit comes from the loan interest that is 100,000 times 6%. So this will be the outcomes, and this will be the results for our cash flow for the 3 consecutive years.
Hello, my name is Yang, and I want to talk about our company, named Public Company, the balance sheet analysis. So this is our balance sheet, and you can see here clearly. And we saw that our company total assets and total liability, sum of total liability and equity is the same in every year. That means that our balance sheet has no problem in it. It is always balanced. So let's talk about our company in 2022. So in 2022, we earning 1,200. We get 120,900 from of cash, and we have a fixed asset of 63,000. So our total asset is 183,900. In our liabilities, which mostly in bank, which are bank loans, our first year liabilities is 87,500, and our equity is 120,000. This cash is from the bank loaning from bank, and this is our earnings, our profit. In the 2022, we saw that our earning is in negative. So in 2022, our company is gaining losses instead of profit in the first year. So our total equity is 996,400. In 2023, we have a small gain, a small increment of our current asset, and decrease of the fixed asset. Therefore, our total asset is increasing compared to 2022. So look at our liabilities. Our bank loans is also decreasing in this year, in 2023, compared to 2024. And in our equity, in our company equity, we also remaining losses, but it significantly decreased. The losses is significantly decreased, and so our total equity is increases. In 2024, we have a significant growth on our current assets and also our total assets. We also our bank loans is decreasing, and now our earning is in positive. So in 2024, our company is regaining the profits, and our total equity is greatly increased. From this 3 years, we can see that in 2022, our company is in a loss, but when in 2023, the losses is significantly decreased. That means that our company is in a low risk form, and our earning and we gain a lot of earning, which can manage to recover the losses from the last year. So in the next year, 2024, we become earning, and our liabilities is decreasing. That means that our company now is safe and highly profitable. So in conclusion, the assets and the liabilities of the business is balanced in these 3 years, 2022, 2023, and 2024. And also, we can see that our company is highly profitable because we can gaining from losses to earning to a profit of 48,300. Therefore, the net loss of a company is being retained by profit. You can see that from here. And also, the financial risk of the company is significantly reduced because our loan is being paid down and the bank loan is slightly decreasing. And our company equity is increasing much more. Also, the company shows leverage improvement because our assets and equity is increasing and our debt is decreasing. Therefore, it also shows that our company is high liquidity because we earn all of the money, all the assets, it comes from cash and the earnings rather than the fixed loan and the capital. So that's our company's balance sheet analysis. Thank you.
Hello, my name is Wang Yun. My part is income statement analysis. So the contents will have four parts. First one is a report overview. Second is a presentation of core data from 3-year profit and loss statements. Third is the key finance indicator analysis. Fourth is the interpretation of business treaties and changes. So the first one, overall data resource actual operating finance data of the company from 2022 to 2024. Second, core objectives to clearly represent the changes in revenue, cost, expenses, and net profit over 3 years to analyze the pace to improve corporate profitability and key driving factors, and to provide data support for subsequent business decisions. The last one is the scope of the report, covers core items such as operating revenue, operating cost, product expenses, interest expenses, and net profit. That's my part done.
So now this table represents the net profit starting from 2022 until 2024. So to get the net profit, first we need to use the revenue to deduct cost of goods sold, and we will get the gross profit. And we take the gross profit and deduct the operating expenses, and we will get the net profit before tax. And finally, we deduct the tax, so we can get the net profit. So as we can see, the net profit is increasing from 2022 until 2024. For example, there's an increase of 280% from 2023 until 2024.
In conclusion, based on the analysis of the cash flow, income statement, and balance sheet for 2022, 2023, and 2024, the company both slides show an improving financial condition. In 2022, the company made a net loss of 23,600 ringgit, but it was still able to pay its debts because the total assets were more than the liabilities. The initial large cash flow were used to pay for capital and set up bank loans. In 2023, the company made a net profit of 16,100 ringgit. The profit was used to cover the losses from previous year, so the accumulated retained earnings loss decreased from 23,600 ringgit to 7,500 ringgit. Lastly, in 2024, the company achieved a strong net profit of 55,800 ringgit, resulting in a positive accumulated retained earning of 48,300 ringgit. The company relies on its own profit and equity for funding instead of debt, making it in a stable and strong financial position. That's all. Thank you.